Coming up today, stocks put in a strong rally with the White House just backflip. A look at Tesla's earnings. Did we just see a top in gold and a rotation into Bitcoin? And why volatility has been made great again and likely to remain so going forward. It's all happening here today, guys. Let's go. Oh man, you gotta love the stock market, right? We went from bright red yesterday to bright green today, as this is still very much an up-down choppy market out there. And we just got some very important news coming out from the White House that's dramatically moving markets after hours as I speak, that I'll dive into in a minute. But before we get into today's daily market review, I'm super excited to announce the launch of a brand new option service called Market Makers Kit, due out next Thursday, the 1st of May. And I promise this is strategies and tools that have never been made available to retail traders ever before. And it will equip you with everything necessary to trade options just like a market maker in this perfect environment for trading volatility. And so if you want to sell options to degenerate gamblers instead of being one yourself, then make sure you stay tuned in here to Click Capital, subscribe to this channel if you haven't already, and if you want to be amongst the first notified of when Market Makers Kit goes live, then click the link below this video or head straight on over to our website, clickcapital.io/volatility, and enter your email and TradingView username, and you'll also get free access to my volatility heat map indicator today as well. Because I truly believe volatility has been made great again, and that's thanks to this guy here, an absolute godsend for us options traders. Back and forth, back and forth. His style of negotiations is to create chaos, confuse the other side. That also causes a lot of volatility in markets. And we're just getting news hitting the wires, and what appears to be a bit of a backflip, or at least a big pullback, and dialing up tensions with China, with Trump now saying Chinese tariffs will be nowhere near 145%, and that he's not looking to play hardball with China. Now, whether this sticks or not, because we seem to be getting conflicting statements every day, it's really no surprise to see the VIX kind of stuck above 30 here, but that rhetoric does appear to be backed up by Treasury Secretary Scott Bessent, just telling investors he expects trade tensions with China to de-escalate. Are they actually trying to make a deal here with China? And if so, will China come to the table? All we've seen from them so far is bite back and a bit of a tit for tat. And on top of that, we may have got a backflip on Jay Powell as well. Man, you gotta love this action. Very entertaining at the least. After coming out yesterday calling him a major loser, saying he can't wait to fire him, we've just heard today that he has no intention of firing the Fed chair. What exactly happened today? Did Scott Bessent pressure him? Did the Chinese indicate something to him? Are they getting worried about long-dated government bond yields that have done nothing but gone up since Liberation Day? Either way, the market seems to like it for the here and now as I'm making this video. S&P 500 up over 1.6% in post-market trading, on top of the 2.6% it did in regular hours. Pretty substantial move ever since that China de-escalation headlines hit the wires. Appears to be just what the market was looking for. But like I said, even though we had a really good regular trading session today, still wasn't enough to get the VIX below 30. Along with the term structure, also stuck in backwardation here. But that's the thing with this White House. We get one thing one day and another thing the next day, and it's creating so much jet lag for the markets and institutional investors alike. It's hard to know what to make of it. And remember, nobody knows how exactly this all plays out because none of us have ever seen extreme tariffs like this in our lifetimes before. And so I agree with this headline in Barron's today. Volatility is here to stay, and it's likely to keep pressure on all of our long-only portfolios. We're going to continue to see wild swings up and down, even if we don't get a prolonged bear market or recession. And currently Trump in his second term is making the first term, in which a lot of us thought was really volatile, look like a walk in the park, as we're now getting moves in market that rival that of 2008 GFC and the 2020 pandemic. And not only this huge upending of decades-long policy coming from right up the top of the US government, dramatically shaking up the world. It's kind of like an explosion went off. That's having ripple effects all across global financial markets, in addition to other big structural forces like the yield curve, which pushed forward 36 months has a strong correlation with the VIX, suggesting we're in a new volatility regime that could last several years. And in fact, ever since Liberation Day, the 2nd of April, the States has the third worst performing stock market. There's been a mass exodus of capital from USD assets. And funnily enough, it's actually Mexico that's been performing the best since then. Country that was supposed to come in the firing line from all these new tariffs. And even though we had a good rally in the market today, we still haven't been able to climb out of the extreme fear zone. Been stuck down here for several months now, as investors are still by far and large on edge. And apart from those fresh headlines coming out from the White House, what is also moving markets here as I speak and and got people talking is earnings out from Tesla, which, as I had forecast, came in pretty soft. In fact, I'd call it a shocker. Auto sales down 21% year over year. Can't recall seeing such a big dip quite a long time. Luckily, energy generation and storage still growing at a healthy clip, 67% year over year. But overall revenue was still down 9%, as no doubt there is likely some brand backlash going on because of Elon Musk's involvement with this White House. Once again, leaving a trail of volatility everywhere they go. And of course, there's other factors like a soft European economy, the new Model Y being rolled out, but still, this still came in a bit worse than what even I had forecast. I knew it was going to be soft, but this was a little bit of a shocker. And so there's a look at the Tesla daily coming into earnings. We were up 4.6%, and then it's going down to a 5-minute chart after hours. As soon as I saw the numbers, I was like, oh boy, here we go. This thing's going to get clobbered on such a big miss. Analysts expecting 41 cents earnings per share, came in at 27. Sizable miss on revenue as well. But then look at the stock price. We're up almost 5% again after hours. That's why earnings can be such a crapshoot. You nail the results, the stock does a completely different thing. And so it's kind of mind-blowing to see this, even as a Tesla shareholder. One of the best reactions to possibly one of the worst results I've ever seen for the stock. Currently trading around $2.50 a share. No doubt the bump up in the market after hours is helping this, but even still, this is quite impressive stuff. And so like I said, there was a few bright spots, like energy storage being deployed, significantly growing here, Q1 versus Q1 last year. They said the lower price model is still on schedule for this year. But what I think's really got the market warming up is news that Musk said he's not going to resign from Doge, but take a big step back, had been his primary focus, which did understandably attract a lot of criticism. I think he should step back as CEO from Tesla, actually. But he said he's only going to work 1 to 2 days a week on Doge now and get his focus back to Tesla. So that's exactly what the market needed to hear here. In addition to the story of robotics, Optimus Bot, Robotaxi still appears to be intact as well. So the market's really hanging on to that here. Because with a market cap of 765 billion, PE still around 100, for sure, it's not cheap, especially as we've actually got current declining growth. So I'll be interested to see whether the stock holds around 250 in regular trading tomorrow. Along with the market at large on this pretty strong bump up we're getting after hours as I speak, now up almost 2% from the close. But that only takes us to about 537 on the SPY. Got the 50-day VWAP at 543, and that's something we haven't traded above for a few months now. And we've now got the International Monetary Fund lowering the global growth outlook, with they too also chiming in on the need for the Fed to remain independent. We also heard from ECB President Christine Lagarde as well come out and say, I hope Jay Powell doesn't get fired. Significant blowback on those big calls yesterday, likely adding pressure to the White House to dial it back, regardless of whether he should cut or not. And I mean, when you think about it, it's kind of crazy that yes, there is a board of Fed members, but 90% of the decision pretty much comes down to one man. One man determines what interest rates should be for the world's largest economy. And as humans, we all suffer from biases. None of us are perfect. I'm not saying Jay Powell has to be perfect either. He does have a very tough job, especially at this point of time. We've also got the Institute of International Finance saying the States is likely to see a recession this year, with the consensus being that tariffs will lift inflation from their current downtrending state. But we don't even know if these tariffs are going to stick. The way things are going, they could all be gone within a few weeks. Nobody knows. And there still is the possibility, even if the tariffs do go away, there's been such a shot to confidence in global investors, we may not just scream back to all-time highs in the near future anyway. And we can see pretty good rallies within a bear market. We've pretty much had 2 big bear markets so far this century. In the early 2000s, and the GFC, late 07 going into early 09. And looking back in those bear markets, even though the GFC saw the S&P 500 fall 57%, there were some decent and even multi-month rallies in that time. In fact, it's kind of interesting. Most of the time, stocks were actually holding up, if not going up in the bear market, and all the losses happened very quickly. And we saw that back in the bear market in the early 2000s as well. S&P fell 50% back then. But most of the time, the market was holding up, even rallying, sometimes 19%, sometimes 21%, but the falls came quickly. Marked the market down, we got the bounce, get those sharp kind of waterfall price action before we get those V-shaped kind of bottoms there. And just looking back at past bear markets, even if we don't get a recession, often the market won't bottom until we see a PE of around 14. If we do get a recession, it's more closer to 11 or 12. We're still currently around 20, so there is the potential potential for us to fall more. And that's something as investors we're going to be mentally prepared for, because we've now got Wall Street, the big bank CEOs, they're worried. And this has changed a lot in the last couple of weeks. The 2nd of April was such a shock to the system. It's like a big bomb just set off unexpectedly. Now got Goldman Sachs CEO thinks the markets will remain under pressure for some time to come, as investors are still trying to figure out what the new rules of the game are. We've got the most amount of economic and trade policy uncertainty that we've ever seen. And so the market has had to discount that heavily. That uncertainty comes at a price. And he's also right in saying how different the mood is now from just back in January, when we're all excited and optimistic about going into a lower regulatory environment and lower tax. And I think the White House may have just gone a little too hard to start with on these ultra extreme global tariffs, even though we're already in the process of walking them back. And we're just getting some moves we've never seen before, with the dollar, bond yields, stocks and gold, all that mix here, giving us the biggest move in the US 30-year yield when the stock market has come off by more than 5% in a month. And there's a look at the 30-year yield, which you can see volatility lighting up in the volatility heat map indicator. I don't think the White House was expecting nor wanting this at all. And that's probably is what's got them changing their tune, while still trying to remain in a position to negotiate and not walk back too much, as that could affect the outcomes of the negotiation. And so gold's been ripping like crazy throughout all this. But did we just see a little bit of a blow off top today? Because obviously the dollar has been under extreme pressure the last couple of months. It looks like there'd been a bit of a rotation into Swiss francs, potentially some big money reallocating over there to Switzerland, where they also happen to have big gold vaults. Just looking at gold futures here on a bit of a shooting star formation, and the popular GLD Gold ETF Trust looking quite stretched here. Super volatile move. We've got reversal signals and this monster volume, 35 million units traded today, which, looking back in history, any time we've got these monster volume days has coincided with short-term at least peaks in the price of gold, looking at GLD here. And so I'm not calling an end of the gold bull market, but potentially a bit of a short-term top. Got this massive divergence with gold miners as well, looking at the HUI index, also known as the gold bugs index. Still got a ton of catching up to do. And since the price of crude has still come down a lot, even though we've bounced pretty hard from a couple of weeks ago when we fell down to $55 a barrel briefly there, this has still created one of the most profitable environments for miners. Looking at the spread of spot gold versus crude, mining is very energy intensive operations. So the lower crude is, the more profitable the miners are. And just looking at a monthly chart of GDX to gold miners versus GLD, we're still floating with breaking out from this multi-year bear market and the relative valuation. And that's why lately I've focused more of my own allocations to the miners, away from the underlying. And so even if gold did stall here for a bit, I still think miners could do some catching up. And let's not forget, a big part of this move in gold over the last year or two has been global central banks and their pursuit of de-dollarization, shifting their foreign reserves from USDs and USTs into gold. China now got over 7% of their foreign reserves in gold, along with Russia and the rest of the BRICS as well. But to speak in here short term as us traders, potential swing trades, maybe some of that money could be rotating into Bitcoin. As I noted yesterday, it was starting to wake up even though stocks had come off hard. In a clear divergence, they started holding above their 50-day VWAP. Stocks were down sharply yesterday, but Bitcoin perked up and it's extended that rally today, up over 6%, now flirting around $93,000 a coin. And it looks like it could be starting to act how it was originally set out to behave, an anti-fiat currency. It shouldn't correlate with stocks, even though it mostly has done. But now we've got gold off today and a big move up in Bitcoin, in addition to some data suggesting there's a lot further to go, looking at global M2 money supply, basically how much money's floating around the world. Pushed forward 12 weeks, quite a strong correlation with the price of Bitcoin. Because remember, Bitcoin's priced primarily in fiat currency. It's measured against USDs. And just like gold, it's a finite asset being measured against a infinite asset. Global central banks print at will. They always have, they always will. And so it really could be this simple. And Bitcoin could soon break out to new all-time highs over the coming weeks and months, and we may even see $150,000 a coin for the first time this year. That wouldn't surprise me at all, especially given the shaky global macro backdrop that we've got. And stocks under pressure, investors are looking for assets that are performing. It's why gold has got record inflows, seen some momentum in the miners, and now investors may be coming back to Bitcoin as well. And just looking at some of the Bitcoin miners, very good moves up here today. Looking at Mara, up 14% above its 50-day VWAP for the first time since December. Bit of a push up there for Riot Platforms, and CleanSpark as well, up 17% today on good volume, along with bullish seasonality over the coming weeks and months. And so the tide could be changing on crypto here. It's been a bit soft for a few months. These trends can often persist. And another way to express this view, trading opportunity, I'm currently looking at setting up a paired iron condor in the options market since we've got elevated implied volatilities. Is long the Bitcoin Trust IBIT versus short GLD gold, which I may potentially put on tomorrow as we appear to be getting some signs of accumulation. We may have turned here and we're still underneath the 50-day VWAP. And so I may look to play this back up to the top of the buy-sell band over the coming weeks, as I do think gold, at least in the short term, has got a bit stretched and investors may be coming back to Bitcoin. So that's my thesis for the trade, and the technicals appear to be lining up on that as well. And again, that's something you can learn in the Market Makers Kit due out next Thursday, along with the necessary tools to put on pairs trades using options. It's a great way to keep your portfolio delta neutral, and that's how market makers do it. They're not betting on the direction of the market, but rather providing liquidity, profiting from mispricings, and selling volatility that is higher than realized. And just getting back to Tesla as I speak, still hovering around 250. Simply a remarkable result here. And interesting timing once again, I guess, from the White House. Last time we saw Tesla get in trouble last month, we got the announcement of the 25% auto tariffs, which benefited Tesla. And now they were really weak coming into earnings here, really weak earnings result. And now we've got a really bullish headline from the White House. So all of this has pretty much turned into a soap opera. The back and forth, extreme levels of uncertainty. How this all plays out is still yet to be seen. And that's why I'd be surprised to see volatility back below 20 anytime soon on the VIX. And this market still remains dicey, as my custom indicators are telling me here. We seem to have found some support at 5,000 on the S&P, but we do have a bit of a roof here around 5,400. And I'll be interested to see when we get the new big trade deal, which we should, hopefully this week or next, possibly with Japan. We're likely to print a green candle and take out 5,400, but can we hold above there, or has the damage already been done? Either way, the White House is going to keep things interesting. I'm certainly enjoying it from an options trading perspective. And if you want to as well, then click the link below this video or head on straight over to my website, clickcapital.io/volatility. Get my volatility heat map indicator 100% for free, and you'll be the first to hear about the new Market Makers Kit service due out next Thursday. This is unlike anything you've ever seen before. That's all for today. Thanks very much for tuning in, and I'll see you back here again at Click Capital this time tomorrow. Cheers.